Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are in the new month, the month of December, and it is the last month of this year, 2013. So we'll come across some peculiar moves happening in the market because the players are expected to make the monthly as well as the yearly trend reversal moves. So during this Asian session live market analysis and for the forecast for the week, 2nd to 6th of December, I'll give the expected market moves as well as the levels. And today we are on 2nd of December. Between 5 and 5:30, I'll try to explain to you. Then later on, I'll come back on Thursday, 5th of December, and try to review whether the market has moved in tandem with the expected market moves, and whether the range or the levels what I give are being respected or the market has deviated. All those information, we'll try to review it. So first of all, the derived forecast. So it is an algorithmic derivation, statistically derived forecast. And algorithmic derivation means a sequential statistical analysis using the parameters which are influencing the market. And also we'll try to fine-tune the market by the forecast by market trading technique. And we will note down the initial lows and the highs around 3:30 GMT in the 4 majors and 2 commodity pairs and try to find out what type of moves they are making in the market in order to derive what could be the next move. Then in spite of all the forecast, etc., we need to use the trading strategy, which is vital, because the market can move against us, our reading can go wrong, and the players may have different intentions, and we may think that it is the end of the range, but they may extend it. In such a scenario, you come across the trading strategy like using the hedging order to limit the risk and use the trailing stop in profit-making position gives us enormous profit. And also the hedging gives the opportunity for us to do either way trading. So let me give you the forecast for this particular week, 2nd to 6th of December. And it is the first week of the month. So volatile move with big downward moves may be seen to start with. And later on from the mid-second week, they are expected to make the trending moves in the market. So this month and the month of January, the players are expected to make the yearly trend reversals. And last week, it was the month-end time. They have done the monthly trend reversal move. And in this monthly trend reversal move, they made the aggressive gains in the case of Euro and GBP and also USD-Yen. And then because of that, we have seen the yen crosses have gone to the extreme levels. Now, Euro-Yen is trading around 139 area and GBP-Yen is trading around 168 area. So this way they try to gain the levels, one-sided moves they make it in order to hit the stops of any level short sellers. And that is the basic idea of doing the one-sided moves in the market. And if the traders continue to take positions at a shorter intervals of 20-30 pips, then it might lead to overtrading and the margin call. So most of the traders who lose their account during that of the month end or the new month beginning time or during that of the year end time. So because of this sort of extended move. So you have to survive in this particular condition. At the same time, try to earn money. It is not the mere survival is going to help us. We have to earn money out of such moves. So knowing that they will be making the one-sided moves, on the upside last week they have done it, and this week they are expected to make it on the downside. And you know that there are a lot of data to be released out in this particular week, and they are considered as the prime data like the interest rate decisions in BOE and ECB and also the non-farm payroll. And so people might be very cautious while committing positions. And you know that normally after that of the Thanksgiving, the players invariably make the downward move in the market also every time. If you refer to that of the earlier occasions, we'll come across that. And so the forecast also say the same. So swing and slide moves are expected during that of the Japanese session today, and swing and firm up could be seen during that of the European session, and again during that of the US session there will be a slide. Then again tomorrow they could continue to slide during that of the Japanese and the European session and firm up. And Wednesday they could make a dip and a firm up, and then swing and slide during that of the European session and firm up during that of the US session. So they will try to offload the positions. At the same time, they will not allow the market to drop in a big way. They will support and gain the levels so that those who have taken the sell positions, they will induce them to do the short covering or induce them to book a minimal profit. But they will continue to be the sellers and then try to drop the market on Thursday. And for that of the BOE and ECB rate decisions, they are expected to make a big slide and then firm up towards that of the European session, telling that non-farm payroll has to give the further clue. Then later on, we'll find on 6th of December, when non-farm payroll is going to be announced, they are expected to make the swing and firm up during start. And during that of the release and before that of the release, they are expected to make a downward move. And during the early US session also a downward move, and later on firm up. Then again, 9th and 10th of December, they are expected to continue the downward move. And you know that GBP is the currency which is used to create the market sentiment. And now you find that it is the only currency which has gained in a big way when compared to the other currencies. Other than that is Aussie. And Aussie, it was beaten up last week, so it is gaining a little bit as retracement. And GBP is the currency they use to create the market sentiment. So you have to understand that the bullish sentiment, they are trying to create it by gaining the levels in the case of GBP, and they are expected to drop it and more drop during that of the week and try to make a downward move in the case of GBP to create the bearish sentiment. And once they create the bearish sentiment, the traders will go in for sell and buy trade. But now if you ask any trader, why not you do sell and buy trade, they will hesitate. After the gain, they hesitate to sell, but they sell after the drop. And similarly, after the drop, they hesitate to buy, but after the gain, they try to buy. So this is the trader's psychology, and the players know very well. And making such extreme moves and also the one-sided moves, the players are able to really reap good profit out of such emotional traders. So most of the time, you will come across this drop as the intentional move, and firming up could be the extended move during this. And again, they will continue to make the downward move. This is what the forecast says. And let us see and compare it with the live market and find out what could happen in this market. Then in the case of expected levels for this particular week, so there will be initial drop till that of 10th of December. And later on, we will come across the year-end moves as an upward move. That will again be an aggressive move. So they will initially create the bearish sentiment, and once the traders freely take sell positions, thinking that, okay, year-end, the Euro and GBP are expected to make a drop, but they will gain the levels till that of year-end and first week of January. And then people will think that, okay, the market has to continuously rise, but they are going to make a very big drop in early part of 2014. So keep in mind that the players are here to make money and not simply showing the levels. So by looking at the levels and you find that it is new high, new lows, etc., don't get confused. And here the players are making the moves in the market, but still they have the limitations and they cannot continuously rise or continuously drop the market, as I explained many times. Now with regard to the expected levels, Euro could form 1.3450 level during the drop, and 1.3625 could be the high, and they are shown so far 1.3622, and the low is 1.3580. Then GBP, it could come down drastically to 1.61 area, And so far the low they are shown is 1.6370 and 1.6450 could be the high. They went up to 1.6442. Then in the case of yen, 100.25 could be the low, and they are shown the low as 102.23. 102.50 could be the high. They went up to 102.60. About 10 pips they have gone higher, but they have come down. So let us see how exactly they are making the moves from that of the mathematically derived levels. In the case of CHF, 0.9050 could be the low, 0.9044 they have shown. So, then in the case of the high, 94.50, and it is 90.666. Sorry, I am not updating it. Then in the case of Canadian dollar, it could come down to 1.0550 level and go up to 1.0875. So far they have gone up to 1.0629. So every drop is a buy opportunity in the case of Canadian dollar. And now we can see that USD CAD and Australian dollar, they are showing positive net change. And in the case of the majors, they are showing the USD weakening move. So they are handling the crosses. Then Aussie, 0.9075 could be the low, and so far they are shown 9108, and 9350 could be the high, 9163 they have shown it. So the range is going to be almost similar to that of last week. But the thing is, last week from the low, they have gone up to high. And again, they are expected to come down before making the next rise in the market. So the forecast says that most of the time it will be slide in the market. And here you come across the market is closer to that of the expected high. And they are expected to make further downward moves. And only in the case of denominator currencies, they are near the low and they are expected to gain the levels. But Aussie will be the currency which has been beaten up last week. So it will be making an opposite move. So instead of big drop, it will make the gains and hold on that sort of moves. Now coming to that of the market reading. We note down the initial lows and the highs around 3:30 GMT in the case of all the four majors and two commodity pairs. So 1.3580 is the low and 1.3622 is the high. They sit and they are not breached the low or the high. And in the case of GBP, 63.70 is the low, 64.42 is the high. And they made a gap opening and then started gaining the levels. And then you find that they stopped cutting the high around 1 GMT and started making the slide slowly. Then the case of USDM, 102.23 is the low, 102.60 is the high. They are in the middle level and with a nominal negative net change, but slowly will come across zero, and GBP also start showing the negative net change because they intend to make the opposite move that of what they had done in the case of Yen crosses last week. In USD CHF 9046, 9044, did not note properly. 9044 is the low, 9066 is high. They cannot breach the low or the high. Then in the case of Canadian dollar, 1.0614 is the low, 1.0629 is the high. So in none of the currencies, they just breached the. In AUD, they just breached the high by 1 pip. And other than that, we don't find any of the currencies showing any significant move. And they will simply hold and without making much of a pullback in the case of numerator currencies, try to take sell positions. And they will build the sell positions and slowly withdraw the support giving to the market so that it will drop. Then immediately they will come for a support and form up. Then again let loose the market, it will drop. Then again they will come and give the support to the market. What they do is they just buy, firm up and book profit. Then again allow the market to drop to the next lower level, support and gain the levels and book profit. That sort of moves they do it. And I explained many times that they buy 10,000 lots and sell 20,000 lots. That way they build up more sell positions, and only if they sell the market can drop. Market cannot drop on its own. Only in the bank terminal they can just place the sell orders below that of the market, or they can place huge volume sell orders, thereby the market may drop. In online trading platform, if you keep any lower level sell, the platform will not accept unless and otherwise there's a hedging order or an entry stop order. So we need to understand that the players are here they just gained very quickly the levels, created the bullish field and build sell positions. And they briefly done an extended move in the case of GBP on the upside, but in the case of Euro and GBP, they have nominally gained the level, and then they are expected to slowly drop the currencies. And it will be again a contrarian move, drop in the case of Euro, USD as well as GBP. And USD CHF and USD CAD are expected to continue to gain the levels. Aussie is also expected to gain the level as a contrarian move. As Euro and GBP were gaining last week, Aussie was dropping. So the opposite, they will try to do it in this week. So we note down the initial lows and the high. When the market is near that of the high, we try to take a sell positions from start, 30 minutes from the start of the session. And then once the position makes profit, we keep stop at entry and trail the stop when the profit continue to increase. And then we exit around 45 to 75 pips drop. Then later on, they will make a pullback, and again we can take a sell position and the market will come down. So don't try to do position trade in this week or in this month, and try to do only swing trades, because they are expected to make trend reversal moves. The trend reversal moves will be mostly whipsaw moves, and during this time they will make upward extended stop end as well as downward extended stop end. So you will not be able to withstand that if you try to trade without a stop or a hedging order. So keep that in mind. That is very vital to limit the risk during this particular time frame. Otherwise, the account may attract margin call. So carefully take very less positions so that even if you trade without a stop, you will not be incurring any loss. You will not be getting the margin call. So try to take only 1 or 2% of your equity, the exposure, and try to earn money from the big volatile moves of the market. And you'll find that the market will never be in a position to develop a bearish or a bullish field in this particular time frame. They will suddenly create a bearish field and reverse and say that market has turned bullish. Then we think that, okay, we can do buy and sell trade and try to commit buy position. They will suddenly drop and say that market has turned bearish because of fundamentals or because of technicals or whatever the excuses they have. Now, with regard to the market timing, I have shown it many times. So you can just note down those who are not noted down earlier. So early in the late sessions, they handle the majors, and mid sessions, they handle the crosses. So Japanese, European, and US sessions are the 3 sessions of the day. And gap times, they make the false move. And the stop-ins, they do it during the early and the late sessions. And the false move, sometimes they do it during the data release time or before the data release time. And they alternate the extended move with the intentional move. So extended move will be a downward or an upward move for 2 hours. They have done the extended move in the case of GBP today. And afterwards stopped cutting the high and started making the slide. And similarly, they do it on the downside also. Followed by that is the intentional move. The intentional move will be for 2 sessions and start of the 3rd session. And that will be a slow move. And it will be opposite to that of the intentional extended move. Sorry for the bad throat. Now, this slide I want to show you with regard to the yearly trend reversal time. because I want to abundantly caution the traders not to burn their accounts during this particular time frame. Trade cautiously, and those who have been doing the currency conversion trade, you will get great opportunity of converting the currencies from that of the strongest to the weakest and weakest to the strongest and this sort of thing, so that you will be able to really earn very good money during the new year. So if you convert it to that of the weaker currency or the weakest currency, then by year beginning, you will come across those currencies become very strong. That is what the yearly trend reversal is. So the last month of the current year, that is December 2013 now, and the first month of the new year, January 2014, the players will do the 2 months, the yearly trend reversal move. The yearly trend reversal moves will have whipsaw extended stop-ins on the upside as well as the downside. So extreme one-sided moves may be seen in majors and commodity pairs during the 2 months, and that will lead to extreme moves in the crosses as well. Already we have seen such thing in the case of the M crosses, and you know that they do the contrarian moves, and also by that they are handling the crosses. And already last week they handled the commodity crosses, the commodity pairs like AUD and CAD, and also the yen crosses. So they will exactly reverse all those things and continue to handle the majors and the European crosses. Then the sequential trend reversal gets over. So since it is the year-end time, they will take a longer time in handling that each and every pair and make extreme moves and then reverse exactly opposite to that. You won't be able to understand how so quickly it has reversed, etc. But that is how they make big money from that other market. Then quick and aggressive moves followed by prolonged holding and consolidation type of moves are to be made in order to create extreme bearish followed by extreme bullish sentiments in the market. So after the downward move, people will turn extreme bearish, and then by year end, it will create extreme bullish sentiment. Then again, January, early part of January, they will create extreme bullishness, and later part of January, they will create the bearish feeling. So in this process, they may simply take any rumor or news, even it might be a very minor rumor or somebody must have sneezed, and even for that, they will create a very big reactions in the market. So market may react to news and rumors, and in that process, they try to do the extended stop-ins, and forcibly they create the rumors in the market during this particular time frame. So use the hedging order so that you need not be anxious to find out when the rumor is going to be out, because nobody knows how the rumor is being created. But slowly they spread it, and the media is there to elaborate it and give more in-depth analysis with regard to the rumor, and everybody become panic. And so the main purpose of creating the rumor is to made the traders to change their sentiment suddenly, and then they do the opposite and say that when the rumor is there, or sell on rumor and buy on facts. So that is how they try to make all other statements later on. Then big either way trading opportunities will prevail. So as far as trading is concerned, if you use the hedging, don't close the hedging so easily, so quickly, and you can wait for the hedge to make profit and then use the keep stop at entry and trail the stop in the profit making hedge position, suppose it's in the upside, and once the trailing stop is closed, and keep another hedging order to limit the risk 30 pips away from the market. When they start dropping it, you trail down the hedging order on the downside until you are able to keep stop at entry on the sell side. And when they continue to make the downward move, use the trailing stop in that sell position. You will be able to make really good profit on either side moves of the market. The only thing you have to take care is avoid over trading. Because if traders continue to add more position in the name of averaging, then When they make about 200 pips away from you, then all the positions will make loss. Then you will not be able to manage that account. You have to forcibly close less loss-making positions if you want to really recover your account. But you hesitate accepting loss, and then they give a very big loss and say that goodbye to your account. So keep in mind that if you don't close and accept the losses during such time, then the players are there to close the account, or the brokers are there to close that account. So avoid over trading. So why I am cautioning you is, this is the time you find that market makes very quick moves, and immediately you think that you can take more positions so that you will be able to grab very big profit, but they can simply extend because the players make the moves depending upon the traders' pending positions in the market. And they get the insider information, accordingly they make the moves in the market. So we cannot just like that think that we are very smart and taken the positions. Unless and otherwise you use the hedging order, you will not be able to sustain. So keep that in mind and trade accordingly. This week I'll be doing the Tracking the Forex Market Together webinar also, part 1 and part 2, between 9 and 9:45 GMT, the part 1, and 14 to 14:45 GMT will be part 2. So I will try to take the positions during part 1 and try to show how exactly I handle the positions during the second part. And then you can understand the importance of hedging, especially in this week. The market is expected to be very volatile, and we should be able to still make good money. And again, I'll come back on 5th and do the Asian Session Live Market Analysis. So I'll take up the questions which are asked here. Okay, George. Which is better trade, weekly or intraday? And in this month and next month, intraday trades could be wise. Then Aditya one. Well, Euro and GBP fall for the rest of 2014. Now, that will be a very long period, and you cannot just like that give it in small sentences. And they are expected to drop during the later half of January, and later on I'll be giving anyhow the webinars at the time will come to know. Then Kati, can you suggest to buy what you mean by FOMO? Please explain. Okay, FOMO is gaining about 20 to 30 pips, and rise is about 50, 60, 70 pips. Similarly, dip is about 30 to 40 pips, small slide and dip. And drop is about 75 pips. Because we don't have any yardstick to say how many pips it has to drop, how many pips it has to rise. So I use these attributes, that is dip and drop, firm up and rise, in my explanation, so that you will be able to understand how much they could gain or lose the levels. Then Katti Vengat Ramana. Can you suggest to buy any weak versus strong? Weak, W-E-A-K, I suppose. Weak currency, you can find out from the market which currency is looking very weak. Either US dollar is weak at the moment, or Euro is weak, or GBP is weak. Then if the weakest currency, Aussie, is weak, or Canadian dollar is weak, and accordingly you can just convert your currency to the weakest currency or a weaker currency. Then wait for about a month, you will find that weaker currency will become stronger currency. Then exit out. Mr. Katti, then with regard to depositing and withdrawing account, see, Reserve Bank of India has banned Indians trading in Forex. So there is no other alternative available, sir. Then Chowkiyat. Today is good selling level for GBP, yes. Any other question? If there are any questions, you can ask me. Otherwise, I'll show the forecast slide again. Okay. Swing means a gain of 30-40 pips or drop of 30-40 pips from a given level. That is also called a swing. Sometimes what they do is they hold it near the high, make about 10 to 15 pips or up to 23 pips up and down move. That is also swing. Or hold near that of the low and make a small swing. So swing is invariably a move within the high and the low set without breaching the high or the low. If the volume is good, they can go from that of the low to high, high to low and things like that. Earlier days they used to do it, but nowadays they are not doing such moves because of the volume. So volume has drastically dropped. So they are only just holding closer to high, closer to low by doing circular trades. Then Mohan Kumar, Euro Yen, how much it dropped today? Euro Yen, see how much in the sense rather than simply asking how much drop, how much gains and things like that, find the net change. Yeah? And they are in positive net change. And you find that Euro Yen, for example, it is showing about 8 pips positive net change because Euro has gained about 12 pips, whereas USD Yen has dropped about 7 pips. So you find only the USD weakening move here. But when Euro comes to negative net change and USD Yen also comes to negative net change, suppose Euro comes 10 pips negative net change and USD Yen come down by 10 pips negative net change, then Euro Yen will be showing of roughly about 20 pips negative net change. It will be a cumulative effect. So then you try to find out. So first of all, it has to be the spread between the high and the low should be more than 70 pips for you to initiate a trade in a cross. So let them mix the swings and later on try to take sell positions and they should be able to drop at least 75 to 100 pips. Initial drop will be very slow. Then towards the end, the aggressive drops will happen like 200 pips, 300 pips drop, etc. Mr. Venkatramana, please understand that the Indians, the US dollar is very expensive. For about 63 rupees, you get $1. So even if you send about $500, it will be more rupees. Whereas $500 is peanut in the market, in forex market. And just like that, you lose that account. So that is why Reserve Bank of India has banned. And when a condition is banned, when it is not permitted, why you are inquisitive to know how exactly you can enter into the market? I'm not able to really understand. When it is prohibited, then it is not advisable. Why they are prohibited? Because they know 100% of that Indians, when they open account, they lose all the money. Then Stacy, please can you also re-show the levels? Yeah, I will show that. So these are all the levels. The highs and the lows we can see. Almost the same levels are with regard to the initial lows and the highs. You can note down the initial lows and the highs and try to find out how exactly the market is going to make moves in this week. Almost the same levels we come across. Excepting Aussie, they just breached by 1 pip and afterwards they have not made any big moves. Okay then. So I'll come back on 4th, Wednesday, day after tomorrow, and do the tracking the forex market together, part 1 and part 2. And afterwards, on Thursday, 5th of December, I will come and explain to you in the Asian sessional live market analysis, whether the market has made the moves in tandem with the expectations and also the levels, whether they are respected or not. And from there, we will try to take further analysis of the market. So thank you one and all. Wish you all very happy trading and trade cautiously. Thank you. See you on Wednesday.